Markets are reacting to new 25% tariff threats on Chinese auto imports. CAR surges 17.3%, exposed to rental fleet pricing power. Tesla dips 1.6%, leveraged to Shanghai gigafactory margins. Intel up 0.8%, gains on tariff-driven domestic chip momentum. The lab breaks it down now. Avis Budget Group's core hardware, its vehicle fleet, faces a critical engineering constraint right now: ICE powertrain availability, which is at an 88% utilization rate across its fleet, limiting capacity expansion. This compares to competitor Hertz's 92% utilization rate, giving Hertz a slight edge in fleet scalability. Today's 17.27% price surge reflects a market underestimating the physical friction of fleet expansion. Avis Budget Group Incorporated faces a 1.7% revenue growth headwind from lingering Trump tariff effects, quantifying a $10 million margin hit. Management's upbeat tone on shareholder returns is notably silent on operational inefficiencies, signaling potential underlying issues that cautious auditors would flag in the 10Q risk factors section. Avis Budget isn't winning on hardware. There's no die shrink, no bandwidth breakthrough, no TSMC node advantage. This isn't a semiconductor play, it's a fleet logistics and capital allocation game. The bull case? Institutional volume is 69.8% above average. Real money is rotating in, pricing in a summer travel surge and EV transition upside. They're leveraging. Tesla's hardware position is a strength, anchored by its 147mm superscript 2 die size, outpacing competitors like GM's 200mm superscript 2, showcasing efficiency. Rising Fed rates, currently at 3.64%, pose a 10% headwind to Tesla's valuation multiple, as higher borrowing costs erode R&D budget and capex plans. Management's emphasis on bull case and AI demand conceals declining institutional holdings and insider selling, signaling potential overvaluation and waning confidence. The Cybertruck's stainless steel exoskeleton, a 4.5mm cold-rolled alloy unibody, and 800V silicon carbide (SiC) powertrain enable unmatched durability and efficiency, justifying premium valuation through platform differentiation. Competitors are closing the gap with modular EV architectures like GM's Ultium, a flexible 400V platform now in. Intel's 18A process node, with a die size of 176mm superscript 2, is a competitive liability, as TSMC's 3nm N3E node offers better performance and power efficiency, directly impacting today's $66.26 stock price. The rising Fed rate of 3.64% is a net headwind for Intel Corporation, potentially cutting 5% from its valuation multiple. Management is touting AI demand, but the lab hears a pivot from revenue to margin language, signaling waning product pipeline conviction. The bull case: Meteor Lake's arrival marks Intel's full embrace of tile-based 3nm compute dies and Foveros. That's the 3D stacking tech enabling 40% better perf/watt, a direct shot across AMD's bow. The bear case: ASML's EUV tool delays threaten to bottleneck Intel's ramp at the most critical node transition in a decade. CAR scores at 63. Buy. Tesla and Intel hold at 58. Not financial advice. Do your own research. This is Denver Stock Lab out.